Namaskar and good morning. Welcome to our weekly commodity audiocast. I'm your host Ravindra Rao representing Kotak Securities Commodity Research Desk. As in each episode, I'll guide you through the commodity landscape, providing valuable insight, discussing trading setups, and uncovering the latest trends shaping the markets. So let's explore the fascinating realm of commodity markets. After a week of volatile fluctuations, last week commodities except gold closed with overall gains as traders analyzed a barrage of US economic data and speeches by Federal Reserve officials. Surprisingly higher than expected US inflation figures fueled speculation of a delay in the Federal Reserve's move towards monetary easing. January's US Consumer Price Index eased less than anticipated, registering at 3.1%, while the core reading unexpectedly held steady at 3.9%. Both consumer prices and the core rate experienced significant monthly increases of 0.3% and 0.4% respectively, leading to a shift in the full pricing of a rate cut to July from June. Retail sales dropped by 0.8%, marking the largest decline since March 2023, prompting short-term interest rate contracts to once again fully price in a Fed rate cut in June, with the likelihood of a May cut rising to about 44%. The US dollar and treasury yields also reacted to market expectations surrounding the Federal Reserve's monetary policy. The greenback retreated from its 3 month high of 104.97, and US Treasury yields, 10-year Treasury yields, moderated from a 11-week high of 4.33%. Meanwhile, COMEX Gold prices experienced a second consecutive weekly decline of just over 0.5% as mixed US data complicated expectations of the for the Federal Reserve's easing path. However, gold recovered from a 2 month low of $1996.4 per troy ounce to close the week near $2025 per troy ounce, while silver registered over 3.5% weekly gains due to an uptick in the industrial metals. Investment activity in gold remained subdued with persistent ETF outflows amid higher interest rates. Holdings at the SPDR gold ETF declined to 837.31 tons as of February 15th, the lowest since August 2019. China's central bank continued to add gold to its reserves for the 15th consecutive month, announcing a 10-ton gold purchase in January, pushing their total gold reserves to 2,245 tons. The World Gold Council predicts subdued demand for Indian gold jewelry in the next couple of months due to high domestic prices and a seasonal lull in demand. Coming to price action, if you look at COMEX Gold has slightly has recovered from the lower levels, and if you look at the weekly chart, there is a bullish engulfing formation on the daily chart, and the prices have moved up, but it might take resistance near excuse me it might take resistance near 2040 levels, and if it sustains above that, the prices might further go higher. In terms of Indian markets, it has exactly closed near the resistance of close to 62,000. If it sustains above that, the prices might move up till 62,250, 62,300 odd levels. In case of silver, silver has once again come to the 200-day moving average on the daily chart near 23.52, and from there it has slipped. Today morning it is trading around 1.5% down. So the bulls will have to take the price about 23.52 if it has to sustain on the higher side, and if that happens, the bulls might target the next target of 24.86. Until then, the range movement in silver would continue. On the higher side, 23.5 or 23.60 would be the resistance, and on the lower side, 22.2 would be the support. In case of MCX silver, the price has breached a trend line, but as in the COMEX gold, it is near the 200-day moving average of 72,300. So until it goes above that, the prices may consolidate, and above that 73,040 is a 60-day moving average. So these two resistance are crucial. This needs to be breached by the bulls if they have to keep the price on the higher side. Coming to base metals, most base metals closed the week with over a 2% upside, boosted by the dollar's pullback and hopes of consumption recovery in China after the week-long lunar year holidays. WTI crude oil also held on to weekly advance as escalating geopolitical tensions in the Middle East and OPEC members' compliance with supply cuts outweighed the gloomy demand outlook by the International Energy Agency. On the price front, WTI crude oil, as mentioned in our previous podcast, also the prices are trading in a triangle, and the resistance is close to 79.50 $80. So until it sustains above $80, we expect the prices to trade in a range. The good news for the bulls is that the price has once again moved above the 200-day moving average, but it needs to take out the triangle upper bound near $80 if it has to sustain on the higher side. Support now is near 75.50, so we expect the prices to trade in the range of 79.50 on the higher side, and on the lower side 79.50 would act as a good support. In case of MCX crude, price has convincingly closed above the 200-day moving average for two consecutive days, and if it sustains above the 6430 mark, then the bulls might have a chance to take the prices uh, higher towards 6,650. On the lower side, support remains near 6,300 to 6,280. In case of base metals, copper has registered a bullish engulfing on the weekly chart after registering a bullish engulfing on daily chart on 12th February. Uh, the confirmation of the bullish engulfing will come above 725, and if that happens, the prices might initially test 734, and above that it might go on to test 746 on the higher side. But it has to get confirmed above 725, and if that happens, the bullish trend might continue in copper. In case of zinc also, there is kind of a piercing line, a bullish pattern in case of in on the weekly chart, and if the prices moves above 220, which is the confirmation zone, and the price might further go up, or else 220 would act as a good resistance. And on the lower side, the pattern low of around 204.65, which is similar to the pattern low which was registered in the month of June. So there is a double bottom kind of a pattern. So support remains near 204. Below that, the prices might turn extremely weak. So looking ahead in the week, market participants will closely watch the FOMC meeting minutes, speeches by FOMC officials, and flash PMI figures, as choppy US data has clouded policy expectations. The minutes of the January FOMC meeting may provide further insights into why Fed officials are not confident enough to initiate policy easing in Q1 2024, as markets had previously anticipated. However, the minutes might reveal a broad consensus for rate cuts later in the year. Additionally, Chinese markets may reopen on a positive note, fueled by signs of a pickup in consumer spending and optimism regarding construction demand in the coming weeks, as the seasonal winter lull draws to an end. As we conclude this episode of the Commodity Audiocast, we trust that you have gathered valuable insight. Thank you for tuning in, and we eagerly anticipate your presence next week. Until then, may your trading be prosperous and fulfilling.